All right. Good morning, guys. Good morning. Good afternoon. My camera is broken. Actually, today I ordered a brand new camera. Not like a cute iPhone camera, but like a real professional camera. So that would improve. So you're going to be without my face today. But I'm still here, grinding. In a big win already, big profit for this week. I took NASDAQ on both Monday and Tuesday. And then I said to you guys, stop trading. FOMC is coming. Don't fall for it. And I hope you listened. I'm going to break down the movement from this week so far. We have 13 minutes until the open. So I want to review the current price action, what happened, and how we can use the context of what has already happened earlier in this week to take better trades today. Cool. With that said, let's start with the dollar. We had news already. If I remember correctly, it was unemployment claims on Thursday. Yeah. Tomorrow, we have a bigger one. PPI is not the biggest one, like not like FOMC, NFP, or CPI, but it's big. So this will move the market probably. Unemployment claims usually a little bit, but not too much. Cool. If we then take a look at the dollar, I see a massive daily bearish fair value gap created. We also took out a September low. So for now, I'm curious what we're going to do. If you zoom out a bit into the weekly, we're also going to create a weekly bearish fair value gap after this weekly candle is closing. And the 4 hour we already rebalanced here. So this could already be a retracement and we go lower. For now, I'm neutral on the dollar pairs. Why? I can see us doing this. Back to the daily BISI or daily SIBI bearish fair value gap and then go lower, or just go lower immediately today and the rest of the week. So I'm neutral here. Like it's like literally 50% for me. That means for the dollar pairs, I'm also gonna go over euro or GBP. I think we're going to see something similar where longs are at play, but the question is, where do we long from? We just reached a weekly bearish fair value gap. Right here, it's the massive yellow box. Zoom out again to the current price action. We reached that, and now we're rejecting from that. I think a weekly bearish fair value gap is a very nice area where we could retrace from. So, is this already a nice sell structure? I don't know. Exactly the same problem as with the dollar. Already at the 4 hour, we could say like, hey, you may be rebalanced. If we then drop to the another 1 hour, to the daily, we see the same problem happening. Whereas on the daily, there are multiple daily bullish fair value gaps sitting below the current structure. When that happens, I'm most of the time just gonna wait. Patience until we're here. Then if we are here, I'm gonna chill at the lower time frame to take like the classic ICT reversal structure. We have a market structure shift with a V-shaped recovery, like as aggressive sells, aggressive buys, displacement with fair value gaps, order blocks, change in state delivery, the whole 9 yards. Can we go higher from here? Of course we can, but from my own personal data, I'm rather a person who waits. I'm not going to be super fancy and long from and short from here. No, I'm just going to wait until it's super obvious. Same for GU, daily bullish fair value gaps. Same for AU, same for NCU. All the same. Cool. If there are questions in the meantime, or pairs you want me to go over, let me see who's here. I see Jeffrey in the chat. Sergio, welcome. Thanks for the time and the videos. Cool. Glad you like it. Like it's only like 10 or 13-minute videos I share, but there's like an hours of preparing, recording, editing, and all that stuff, maybe more for every 10 minutes of video. So I'm glad you like it. It's a hard thing to condense all the information in just a very small 10-minute video. So cool, amazing. I think time frame alignment video is really powerful. The daily bias video are really powerful. I just shared a new video about PD race. Very basic video, but it is a very important fundamental video. I don't care if you're already making money. I think you should check out that video because it will give you the reminder of how you can super simplify the trading. And what I did, and it's a nice bridge to go to the indices because the majority of you guys here watching trades the Nasdaq or the indices. I implemented the frameworks I share on the video with the trade from both Tuesday and Monday. And I'm talking about this trade right here, why I took it, and this trade. Same trades, almost identical, all based on the most 3 simple PD arrays. And PD arrays is like a fancy term for like a whole list of PD arrays. The most well-known are all highs and lows, fair value gaps, order blocks. There are also more like a breaker or the mitigation block or the inversion fair value gap. There's a lot of PD arrays available, but I want to simplify it for you guys. That's my goal with DionTrades, to simplify it. And so I'm gonna talk more and promote more of that video I just released on YouTube because I think it's a very important video. Cool. But today we're not here to talk about videos. We're here to talk about how to make the most amount of money possible. And I want to explain before they don't expect funny, cool, exciting stuff before the open. So the coming 7 minutes, I want to analyze. And I want to make the analysis so good that it's so obvious what we're going to do today, or not obvious, so we know when not to trade. But the reason I want to explain why I said yesterday, stop trading, don't do it. And then the trading gods stepped in for you guys. Trading View or Tradeovate stopped working. That's even more funny. That's even the trading gods on your side, helping you to not lose money. Because this was the situation after Tuesday. So imagine FOMC coming up. Before FOMC, you don't trade. There's always choppy price action, but even after FOMC. This was the price action. I would say hyper bullish. So cool, we're going to go long. Then here, look at the time. Asia. Asia expansion. Cool. Mark out for our bullish value gap. Then New York Open, another fair value gap. But here comes the issue. Because the 4-hour time frame where the 10 AM game is based on is already very nice. But you should not ignore the actual higher time frame, daily, weekly, monthly. So if we only zoom out one time frame here, the daily. After Wednesday candle, there was a daily bullish fair value gap created. So that means if I want to take longs, for example, somewhere here during FOMC on a 1 minute, and I'm going to target, for example, the high here. There's a problem. Because below the structure you want to trade is a daily bullish fair value gap being created. That's why I said I don't think it's a good idea to trade today. And this idea, I want to support it with one more idea. This idea from, okay, maybe it's not the best idea because we're probably going to do this on the higher time frame. So that means that the Wednesday doesn't matter. The same as if you then drop again to the 4-hour. What happens yesterday? Look at the candles. Like I can go to the 15-minute or 1 hour. Is this like the most of you make the most amount of money when price just moves like this? Nice little staircases, fair value gaps, order blocks in this whole trending conditions. Do you, let's see, 9:30. Does this look like trending conditions to you? Does this look like a nice, this is already the market close. So you actually tried to trade this price action yesterday. Well, congrats or good luck with that, because that's very hard and low probability. But the nice thing about low probability is that because of that, today we have more to play with. There's more candle being printed, and I think we can take out all these highs. These are all failure swings. Failure swings are, where's my nice little, oh here, are swing highs that don't take out any other swing highs. And that means price loves to just go through those without any problem. Cool. Let's take a look at the live chart. Still super horrible, right? So the game plan for the open today, I'm going to mark out liquidity pools. Liquidity pools, if you've seen one of my videos about liquidity, and I'm talking about this too much, I know, session liquidity, daily liquidity, weekly liquidity. And that means, very simple, highs and lows. So I see here a Asia, look at the time, Asia session high and low in this case. I see a PM session low. And what is below this PM session low? You guys already know it because I showed it already. It is a daily bullish fair value gap. So below the PM session low from yesterday, we have the daily bullish fair value gap. It is 100 points away. I think we're going to set the low of the day inside here today. That means at the open right now, I'm not going to short. I'm going to be a patient person, patient trader. I'm expecting this to happen. And then we're going to reverse from there back to the high. This is my bias for today. That's it. Very simple. All based on a daily bullish fair value gap. And once we're on the daily, I know you guys are scalpers or you're trading with futures prop firms and you want to do a nice action on the 1 minute. I think you can be fancy and already short from here at the open. That means I would say low probability short would be this. Let's say 1 to 2. There'll be a short idea. But if I trade bullish structure, and why do I say bullish structure? Look at the past couple of days, guys. I think we are higher time frame bullish here. That means my highest leverage trades are going to be longs. So I don't like then to be fancy because again, this is the structure I'm expecting. We're going lower to the daily bullish fair value gap and then go higher from there. I can short towards there to be fancy, but what if I'm wrong and we're already going higher from here, from the session liquidity, from the Asia liquidity? I don't want to be in that trade. So I'm going to be patient at the open. Let the sell-off happen. And once we are here, then we're gonna dance. I'm gonna ask Lady Nasdaq to dance. And hopefully she says yes. If she doesn't, she's gonna step on our toes and just trade lower and lower and lower. But that's fine. Then we take a loss. And this is what I do every day. I mark out the most obvious highs and lows where we could move away from or move towards. And then based on that, I'm just gonna wait. I used to do that with my students on Discord. We're just gonna wait and sit. And this is what I did here. Literally, I said we're bullish. And then here on the 1 minute, 9:30, liquidity sweep. Cool, let's go in. On Monday, same. Look at this, 9:30, we trade lower into a key level and then we trade higher. So I was not fancy. I waited and then long. And if you have something that works, if you have a trade plan that works, a model that works, you make money with, why change it? So 9:30. Let's see if you trade it lower. Drawn liquidity for me today is going to be the 130 high here on Wednesday. And I'm not saying this is guaranteed going to happen. If you just trade higher from here, cool. We're going to adapt the game plan. But my game plan for now, based on what I'm now seeing, is this. And if the candles are going to do something completely different, cool. So I'm going to screenshot this. And we're coming back to this later. I will also share it in the Discord. Guys, if you're not in the Discord and you're new here, come on. Join the Discord. Links in the description. I share my insights there and my frameworks and as much free value as I can. So I might as well join. NASDAQ trade idea from the stream. I just shared it in the Discord. Cool. Let me see the chat, guys. Gold. Yeah, I'll go over gold. Chris, what's up? I'm here from FXL. Nice fit. I'm more disciplined now. Trading only 10 a.m. Amazing. I mean, that's nice. That's nice. Just having something to wait for is so nice for your patience. Like, for example, now I have something to wait for. Usually I didn't. Or if I'm rushed, some days my mental game is just all over the place. Most of the time when I'm traveling or when I'm just tired or fever, I am going to short this. And I already know I'm probably going to get cooked on that. I'm going to take losses on that. That's fine. Well, now 15-minute SIBI. Surprise, surprise. We're trading lower from that now. Cool. Am I shorting YM? I know you like to trade those wicks. Let me see YM. Again, guys, if you're tuning in later, my camera is broken. There's a new camera coming. Um, no, I'm not trading YM at all. I don't like the structure here. It's too like if I just look at this is not something I like to trade, even on the 4 hours. I like to take trending conditions. It's not very clean for me. Here's well, look at the daily. Yes, we are in a daily bullish value gap here, but how we move away from it, I think we're going higher for YM. Like I think the indices, all of them will go higher. Well, I'm not convinced here. So I'm gonna leave YM alone. I'm more interested here in Nasdaq. So first the lower price action, then higher. Nelly Dread, hey Dion, do you advise to get your strategy, win rate, risk reward, profit by backtesting only or while forward testing? Because I feel stuck backtesting only. It's a great question. You should do both. Like with backtesting, you can go through many different data sets, data points, by just putting in units of time and just collecting data. I think that's the most important part. Let's say 60 or 70% of data building, because you can just collect data way faster. But there's something missing, and that's emotions and just mistakes, which you will make when there is no candles being printed. So, for example, now I have a whole cool fancy trade idea worked out. What if it doesn't work out and I need to adapt, and then maybe I make a mistake? It sucks. In backtesting, you have that less because there is no rush or there's no live candles being printed or the market is not moving away without you. So you should do both, but there needs to be like a little correction. And I use a 10% rule there. So let's say you are backtesting and your win rate is 50% on backtesting. The 10% rule says that your real win rate is probably going to be minus 10%. So if it's 50 on backtest, it's 40 in real time. 60 on backtest, it's 50 in real time. A nice correction for emotional mistakes. Because backtesting only is useless. You should just get out there and just make mistakes. Like do it. Like who cares if you backtest a lot, you study a lot, but then you were too scared to execute on the real money. Like you need to get there someday. So might as well just get out there. Don't over leverage. Use the risk you have in your plan, your trade plan, and then just see what happens. Execute your model, and worst thing that can happen is that you lose. Cool. Then maybe you need to adapt your trade plan, or maybe all your losses are because of emotional mistakes. With my one-on-one students, um, it's always the same. Like I don't focus a lot on technicals. Like I work with people who most of the time already know their models. They already have they already did a prop firm and maybe they've passed the phase one or maybe phase two. They get funded or maybe one payout and then they blow it again. Like in that level. But even if you have like you already did some prop firm challenges with zero result, if you did a prop firm challenge, you most of the time have a model, something you wait for before you press the button. That is most of the time what I do with one-on-one students is use a starting point for their growth. Because who am I to just put my entry models in their face like, oh, you need to use this? I believe that everything works, but it needs to work for you. Very personal. That's why I like to use it. So, for example, Nettie, you probably are now backtesting with a certain model and you have data on it. And if it's profitable, cool. Go to the chart and then see what happens. But keep building data and just make mistakes. It's okay to make mistakes. I make mistakes too. Some mistakes are really stupid. On some days, even now, I'm closing in on 6 years. 6 years of trading, and sometimes I make mistakes. I'm like, bro, you were trading too long to make this mistake. But the key here, I was actually talking on a call today with someone about this. The key of that is maybe 5 years ago, you made 20 mistakes per week. Now you only make 1 or 2 mistakes per week. It's a huge difference, but you still make mistakes. So I hope this framework, little mental framework helps. Bottom line is just get out there, make mistakes, and worst thing that can happen is that you lose. Okay, so the first part of our idea is happening. Aggressive price trading lower to the daily bullish fair value gap. I like the aggressiveness, and I'm going over gold after this. But what I want to say about Nasdaq here, I used to be very FOMO and tilting about this move. the move now because I said we're probably gonna move lower from here, and we do. And now I was like, oh, but why didn't I catch it? I could make 3K of this. But then I remember what I said. Yes, but this was the lower probability movement, and this is probably going to be the higher probability movement. So yes, I miss out on profits, but I choose to follow a high probability in my plan. This is a higher probability move to long. And that helps for this one, for this move. So it's funny. I know, like, after many years of trading, you know yourself. When I trade this move and I share it, you guys now know that I'm probably being rushed or tired or a little greedy or overconfident because this is usually my lower probability move. It's the manipulation move. You guys know the 10 AM game by now. You have accumulation, manipulation, distribution. Train the manipulation, you can make money, but the distribution is the highest probability move. Cool. Okay, I'm rambling, and I really want to go over gold. I'm gonna set an alert here, so we are notified. Oh, when we are there. There we go. Cool. Gold. Yeah, gold. Gold. Yeah. I don't know. I don't know what to say. Like, I can analyze this, but I can just say we're probably going higher. But then where higher from? I don't touch gold right now. Because the degenerate in me says short to a retracement towards here or whatever. But the thing is, guys, if you want to be fancy and you want to try to catch the retracement for the past 10 days, good luck catching the retracement, right? So I would say if you can long back to these equal highs, which I think is a good thing because we have a short-term liquidity sweep here, and the down close candidate made the liquidity sweep is the order block. We're now moving away from that. So I would say higher, but I'm not going to touch it. No, no, and I'm one of the few losers who got stopped out. I, I think I'm one of the few traders in the world who lost trading gold last Friday. I stopped out. Look at the move after. Let's zoom out for context. Yeah, not a very proud trade, but it happens. Okay, so yeah, gold. I would say these highs are nice, but in general, this is you can call it overextended, but it is so explosively higher that all you need to do is long for the highest probability trades. Because shorting such a bullish move is just a very hard thing to do. But in my opinion, currently we don't have the clearest long structure. It's probably going higher. Don't get me wrong. Like, I don't think you need to be a pro trader to see gold wants to trade higher all of the time. And we at some point will trade lower, and then I'm probably gonna rethink my analysis. But for now, just zoom out, guys. Just zoom out. I think there are other better things to trade right now. Just long with no stop loss. That yeah, that is how you should trade, of course. Cool. Okay. YM, like, I'm interested in longs on the indices, and I see YM is now trading higher. Uh, yeah, I'm gonna make a very big deep dive on YM very soon because I've seen YM doing the same thing for over a month now, and I'm just probably gonna call the video the 930 pump because that's what YM does every day at 930. It just pumps one way, like just one big candle, and that's not my style. I like more the dancing, like for example here at Nasdaq, that we just can dance and now just wait for the reversal. But it's pretty funny. This one, the 930 pump. So if you want the back test, go to go to YM for the past couple days. Here, let me see if this here. Okay, well, let's see the 930 pump here. 930, boom. Where is 930? 930. lower. Like if you're a breakout trader, like the opening range breakouts, I think that's gonna be a pretty cool model to trade. But not for me currently. I'm backtesting it and I'm building data on it. So maybe I'm gonna build a nice model around it that is just gonna put my order at 9:30 every day and just etch like 30 points. Scalping model. Okay, alert is being hit. So this is the starting point for the long idea. I'm gonna take a look at ES because maybe ES did not take out this Wednesday PM low. Let's see. So far, we don't. And that's gonna happen. That can mean two things. If you guys are familiar with the S&T, that is when there's two correlated pairs. Nasdaq and ES need to move the same. So if Nasdaq takes out this low right here, then ES should do the same. Let's put ES on the screen. It should do the same, but for now it doesn't. That could mean a potential reversal, but that also could mean that ES is slower. So what I now do is I'm marking out as a potential SMT, and this is the starting point of a potential long idea. And what I then do is wait until there's buy structure created. If you've seen any of my videos, buy structure looks like this. So we displace, clear green candle, ideally with a market structure shift or a change in state delivery. There is a first PD array that is an order block, a fair value gap, or an inversion fair value gap. There's just one PD array here that holds, moves away from it. And then there's a second PD array where most of the time the entry is from. My entries are always around here. So for this, we're still trading lower. There's nothing here. I have days when I'm waiting for this and it just trades lower and lower and lower and lower. And I'm just like, okay, no trades for me. But this gives me the room to wait for my model. If it comes, I press the button. If it doesn't come, I don't press the button. And I see I forgot to log in on my accounts. So I'm gonna do that first. Let me see if I can find it. My bets. Cool. So the screen will be black for, what is it, 10 seconds right now. While I'm logging in into the broker. And TradeOfate did not work yesterday, which is interesting. And we have a nice moment today. There we go. Because if I am gonna get a nice trade, I am gonna add another 150K to the funding war chest. So that could mean I am adding $450,000 in 1 week in funding, which is pretty nice. Okay, so there's no SMT because now you see also ES going there. I love that you can. I love you can laugh about the gold move. Oh, Chris, my heart has been broken so many times. While we're waiting the reversal, I can share. Maybe you've seen on my socials. I lost over $10,000 last week on a personal account. I think it was even 11, 10 something. And that was because I was in a big swing on euro dollar, which got stopped out right here at the Sunday open. Like this wick liquidated together. We had two open trades. This did not do the damage. It was just normal, okay, stop loss. But at that same day, at January 16, oh, it's so painful to go back here. Mini trauma here, guys. The gap here. Look at the gap between here and here. Here did my price get liquidated. Look at where we are now. So that same position that lost me $10,000, TP was here on this trade, and on the euro dollar trade, TP was at the weekly SIBI. So right here, the total value of that TP was over $80,000. So not only I lost $10,000, but if it was a little less of a wick, it was $80,000 now. So yeah, and that's okay. Like if I am choosing to risk with a lot of money, that means you can also lose a lot of money. And that's what we do. Like the numbers just become bigger and bigger and bigger. And sometimes you win, sometimes you lose. And that's fine. And it means like I created a video like just accountability. Hey, I made a mistake in my execution. I think I should have closed Nasdaq with the tariff news. It was like Venezuela and Greenland stuff going on at that time. It is an honest mistake for me to hold the trade, knowing that indices, like I'm a Nasdaq trader. I know that indices love to trade with opening gaps, and so I lost. I lost, and yeah, that can happen. It sucks. And then you have two choices. One is being a little bitch and crying and oh, I'm a victim and oh the market is against me, blah blah blah. Or you can just say, hey, it's a new scenario. First time I traded with a personal account with that money, like I usually trade prop firms. Sometimes I deposit a few $1,000s on an account to trade with. I flip it, and now I took a big personal loss. Cool. Don't be a bitch about it. You made a mistake. That means next time you make the same mistake, or next time the same scenario happens, you change your behavior. That is what learning means. Same scenario, different behavior. So cool. I made a mistake, but next time when the exact same thing happens, I know what not to do. Then I learn. Cool. Okay. Let's see what Nasdaq has in store for us. So this green candles is nice, right? I think we can all agree that this is nice. I saw that my broker locked me out again. It's so annoying. Okay, let me log in again. So the green candles that are now on, coming on Nasdaq, that could be the start of that reversal profile. There we go. So I need 1,200 on this, 1,300 on this account. Guys, if you see two green candles, does not mean reversing immediately, guys. That's why I give you the framework of 2PD raise. So now inside here, it's 50 million SIBI. I want to see a fair value gap being respected. But yeah, that could mean that we're gonna see a reversal soon. But take it easy. Take it easy. We have time. It's 9:40 of 9. If you've seen the video about how to catch reversals using wicks, in that video I also shared this framework. I'm not gonna tell you. I am not very hyped when I see just two green candles. What I want to see is two things. It's very simple. How to test reversals. One is premium or bearish arrays need to fill. But at the same time, discount, bullish arrays, needs to hold. And arrays is for value gap, order block, all that stuff. I want to see it at the same time. So here, I want to see these down close candles being disrespected. I don't see an inversion for value gap yet. But for example, there's now a small 1 minute for value gap here, and we make a wick here. That is not much yet. But ideally, if we now trade higher, then these down close candles become an order block. And that is PD rate 2, and that could give an entry. But for now, there's nothing. Oh, there we go. I will screenshot this and also share in the. Cool. I see Jeffrey make a very valid point. He says if we look at ES and we have that same point of interest, the daily bullish value gap, we are not there yet. That's amazing. Because what Jeffrey, one of my students, one of my students, what very amazing trader. Um, he what he analyzes is the relationship between ES and Nasdaq. So if Nasdaq now is not trading higher yet, that could be because maybe it's waiting for for ES to trade into the daily busy and then it goes. How do you juggle trading evals on live accounts? How do you know when to trade which one? I have a management system. I rotate. Deal which broker do you use for personal trading? You can use. It doesn't really matter what you use. Like there's so many. I would go for a regulated broker. Especially in the Netherlands. There's so many out there. But like the thing is, the money you're playing with is probably not less than. It's not more than 100K probably. At some point, you need to have like a very regulated broker because if you're trading with 5 million, for example, you need to have a very reputable firm. It's not gonna hold your funds and stuff. A regulated broker will not do that either way. But if you're just trading with $10,000 or $50,000 or even less, $100, it doesn't really matter. Just go on Google, regulated broker, Netherlands. See, like there's all those affiliate websites, and see which gives a nice deposit bonus with nice rules. And you should be good. I'm from Netherlands too. I currently live in Vietnam, which sucks for prop firms actually because many prop firms they deny Vietnamese IP addresses. So I cannot trade many prop firms. So for example, the bigger ones like Alpha Capital or Funded Next, all those I cannot trade them. I'm now tied to Take Profit Trader and Top Step, which I'm on my way to get max allocation at Take Profit Trader. But I'm playing those so aggressively that I just I just rotate funded accounts and challenges all the time. But I'm also finalizing for my one-on-one students. I have the prop firm hacking framework, which that's basically the framework I use to get a lot of funding and payouts. I'm making a futures edition. And I know, guys, I know you guys are here as well in chat. I'm promising this for like over 2 months already, but that's because I'm still scaling it myself. There's prop firm hacking that framework that mini series has two phases. One is getting funded and getting payouts, and the other part of that prop firm hacking is scaling, using reinvesting the payouts to get more and more and more and faster. And I only release something when I've done it myself. But now I'm in that scaling process where I'm just playing it very aggressively and max education, get 5-figure payouts, blah, 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 blah. And then it's going to be released. Can you use VPN? Yes, I'm looking into getting a like a VPS, like a server, private server with a residential IP. But I still saw, and I spoke to some traders that prop firms know it, even with residential IPs. I don't know how, but for now, I'm good with Take Profit Trader. I make money there. Okay, cool. Let's while we wait on Nasdaq. ES is not there yet. 10 a.m. is coming. I would not say this is the most bearish or the most bullish 10 a.m. game. We also have this one. So if we don't hold this, we could even trade lower to here. Would surprise me, to be honest, but it is a big 4-hour bullish value gap. Well, next has an option for 25. Really? $25? Funded next. VPN. Yes, $25. Hmm. Interesting. Thanks for sharing. I didn't know that. Cool. Oh, that's nice. Interesting. Okay, so gold is still in that range. Like I'm not gonna touch gold. I know you guys want me to. You guys want me to touch gold. I'm not gonna touch gold. Quickly peek on the dollar. Still not convinced there. The German index now. Oh, it's new. Okay, I think that's good. I like that. Do you have any mentorship? Yes, I do, and that's closed. But I'm gonna open a few spots very soon. But what I would recommend is being in the Discord. I'm gonna post a waiting list link there. Some people already have a waiting list link, so there's already some spots already taken. But I'm gonna push it more because like I only have 24 hours in my day, and I don't have coaches in like on a payroll or whatever. I do it all myself, and I'm not the person who's gonna allow like 5 or 10 new people at the same time because I want to actually help and spend time on improving their training. But like being the Discord, you will be the first to hear updates, and it's sooner than you think. Uh, Demo train the shots. Deals mentorship is very worth it. Not sure who is staying in your lane, but I appreciate it. Not sure who's the secret admirer. All right, it's 10 a.m. game. Where's my nice candle? It's gone. Let me see. There we go. Cool. Okay, so now we even went into the 4 hour bullish for value gap, and this is a serious level for me to look for longs, to be honest. And now it's funny. Remember what I said? Like shorting is the lower probability. Well, I wish I shorted. Holy shit! Look at this. Boom. But it's always in hindsight. It sucks. It's always in hindsight. Cool. So in this area, I'm expecting a reversal to come in soon. So that means I'm gonna mark out the bearish arrays. I want to see them disrespected. So I want to see them completely ignored. Yeah, shorting YM from that 4 hour Sibi is nice, but yeah, it's not my. I didn't like it. Yeah, it is a clean aggressive sells or aggressive buys, aggressive sells, but I don't know. some reason I have trouble with shorting the indices right now because I'm expecting longs coming in. I'm bullish on the indices. And a cool trick here is like, let's say I'm wrong on this whole bias. So let's say we're gonna drop all day. I'm just gonna drop 1,000 points. Then I will probably just take no trades, and I'm just wrong on my bias. And then I come back tomorrow, go back to the higher time frame, and then I see the massive bearish candles on the higher time frame. And then let me remove everything. And then I'm probably, when this is, let's say hypothetically this is the case, then I'm probably going to use this 4-hour bearish value gap that's then be created as a new point of interest to maybe take shorts towards Sunday low, for example. So this is how I adapt to when I'm wrong. And the goal is to, when you are wrong, to lose least amount of possible. That's the goal. Gold dropping as well. Yeah, if Bitcoin dropping, gold dropping, cool. That is nice. No, I just stopped talking. I'm waiting. Waiting for the structure to form. Would I take a 3 minutes inverse value gap entry? Usually I want more. Like, of course, I see the inverse value gap, and it could happen, yeah. But I'm most I'm waiting longer than that. Finally, some down on gold. Wow, gold. That's insane. Dropping 150 points. There's a saying that bulls come with the stairs and bears jump out of the window. I like that analogy because it's so true. Bulls come with the stair, bears jump out of the window. Kiko, if you see a lot of good results on demo, build more data and might transition it to live. And then sometimes I'm just enjoying the silence and waiting for candles to print. But for now, no reversal structure, so that's just a wait. Yeah, reversals are so satisfying. Yeah, most forex pairs in January are not super nice. I'm talking about like the more like the exotics. We look, for example, I see the AD pairs. We can look at this. At that. Yeah, the weekly and a monthly value gap we trade it into. Then see some nice structure from it. So if this is gonna create some for value gaps, I think you can long this whole move back to the highs easily. Like a big market maker model to last year's high. SMT as well. It's a pretty decent reversal, Kiko. You just marked out there. I'm going over all these pairs once a week before that we do weekly outlook. And for now, I didn't see any interesting. I think for next week, AOD pairs will definitely be on. For example, the cat pairs has just been horrendous. But this is actually pretty. I say horrendous, but this is actually pretty clean. Weekly internal to external lower. Wow, pretty clean actually. I was more talking about Euro cat and G cat. That's been so ugly. Hey, oil is finally at that daily Sibby. Let's talk about this for a few weeks. Well, nice. Also, copper. I'm not sure if anyone trades copper here. Look at that move. Oh, it's already reversed. Never mind. Got a notification from someone who sent it to me today. Crazy numbers on Nasdaq. I'm here to learn and improve. To be as patient as you. Yeah, listen. It's easy to be patient if you know where to wait for. So I know exactly where I want to wait for. Of course, the lower we go, the less likely it is I'm gonna take a trade. Because now, just look at the 15-minute. There's like 15-minute bearish for value gaps also now going into this. But I know where to look for, and it always looks the same. But this could be a nice structure because here's an order block. The up close candles here are a breaker. This could be inversion for value gap. So if we now break higher, it's super nice. But only if, only if. So for now, it just looks like we are respecting bearish arrays. Cool. And you know, there's no longs coming in and you need to be more patient. And I don't like these sessions. Like I really enjoy being with you guys here, but like this is like a falling knife, and lowering this is like catching a falling knife. I don't like that because we are very bearish. So even now, longing is not super nice. If it comes, and I will take it. So ideally, a candle close above this candle, starting point for a long idea. So we now have an inversion for value gap. This pink one. See if there's a bullish for value gap created. This is already the first hint that we may want to go higher, but there needs to be also discount arrays, bullish arrays being created and respected. That's what we maybe see now. It would be nice to see it on stream. Usually these streams are until 10:30, so 9 minutes from now. But if of course the setup comes, I will keep the stream on until we are in. It looks if it looks nice. So let's see now. If we now move away from this, that would be ideal. From this level. Because then we have structure. This big box is the 4-hour busy. I'm not gonna take it, but I'm gonna like a little test to see what my contract size is gonna be. Like low hanging fruit target. If you really want to be low hanging fruit, you just go premium discounts, last swing high. Let's see this one, but we also put top here. But this is a nice point to take profit actually, like this low here. Around premium of this range. Let's say I want to target that. For this, because I want to get it funded, I only need a 1-to-1 almost. Like I can do this and I make money. I need 1,300 on this account if I remember correctly. But I need to switch to the micros now on the minis. Let's do that. Yeah, I could just do this on this trade. I need 1,300 to get the funding. But I still need a reaction here. Like it's not enough. It's not enough. I can draw it again, like with an inversion for value gap sitting here. We now have a bullish for value gap sitting here. So it's already hinting a little bit, but you want a candle close above here. That's when I'm gonna get in. I'm not gonna, like, if we're so bearish, if we dropped a couple hundred points now, I'm not gonna be the guy who's gonna take my trade in the first inversion for value gap. Because it doesn't make sense to me. I want to see more. Let just price show its hand that we actually want to go higher. And then I'm not gonna swing for the fences. I'm just literally going to long towards premium of the range. So if we want to go lower, we're going lower from that level. Would I take the entry on the pullback to the change delivery? Not sure which change delivery you are referring to. You mean the bearish one? But this is what I do when I'm about to take a trade. I prepare my contract size already, so I know I'm gonna take my trade around this level, around the green line. We're just gonna do market order, and I know my contract size already. So I now only need to press the button, and I'm good. So I can be very quickly. Yeah, the green line is the premium of the range, and that low. That's not a change in delivery. It's more of a structure shift. I will show later, but I want to watch the candles now being printed to. 'Cause if there's an entry coming, I want to be in. Annoying, right? This is how patience looks like. It's so annoying. Like if it's not gonna move away, it's probably going lower, and you save yourself from a loss. So this is only good that you have like entry criteria. So we're already in this area for 5 minutes. That's interesting. Yeah, gold is great. I see it here on the top. On the top, it's not visible on the screen, but I see like the numbers lower and lower, lower. Yeah, very interesting. Okay, but I think this is a pretty nice example why you wait for change state delivery and also a structure shift, and you wait for a second PD array. This is a reason why I use this. Like I don't. It's not like I don't give you guys random stuff and hope it sticks. Like this is this is what I used to do. What I used to do was already take my trade right here and then probably getting stopped out. After years of making mistakes, at some point I was like, hey, I could maybe do better. And I had made extra criteria, like what I show you guys here. And now we are safe of a loss. And I was pretty close of pressing the button right here. But I wanted to wait for the candle close, and that's a good thing. So no entry. So cool. You just got saved from a. But the entry criteria is going to be the same here. So what if we do this? Could be. And if not, no trades. Very simple. We just sell off today. Cool. Wrong bias. And then marking out the massive 1 hour for value gap here. And then we're going to look for lows. Next swing lows are here. Here. We also now in a massive 1 hour for value gap exchange. Nice. Interesting. Do you think that watching the market and not taking any trades is good for gaining market experience? I think you should come to the market when you have a trade idea, and then just pressing the button when the idea comes, and don't press the button when it doesn't come. When you don't have an idea and you're just gonna watch random candles, I don't think you will learn anything because there's nothing to look for. The market's being moved by like billions of variables, and we just try to make a filter on how to take trades. And that will definitely give experience because this learns when you sit on your hands. And also the mental resilience you need to have. Like to just say, hey, I had a bullish bias today. And so far, the bias looks completely wrong. Cool. How many dollars did I lose being wrong on my idea for today? 0. I think that's a pretty good score. It sucks because ideally you want to make a lot of money. But you can be wrong on your bias and not lose money. And it's amazing. And then come back later, can be later today, can be tomorrow, when the ideas comes again, and then it comes and you press the button and you make money or lose money, and that's what you do every single day. You show up, you look for your model, then you press the button if it comes. Following model for trade it didn't take. Yeah, I think you will learn from that, Kiko. Definitely, yeah. So I had two ideas in my head for today. One was shorting from the 15-minute CB, and I said at the start of the stream, I'm not gonna do that. I'm gonna wait for the reversal. And so far, there's no reversal coming, guys. So it's a shame. But again, it's not about being right. It's about making money. And I did not lose any money being wrong on my long bias so far. And I like that. Um, change the delivery lower. Yes, we do. But are you actually going to short now with these 50 minutes CBs above your structure? I think there's no, like, for shorting, you were too late. For longing, I would wait because there's no long bias coming in. So then the conclusion can also just be nothing, like no action, inaction. There is no better feeling, and I really want to bring this point home because I get too many DMs about this. Coming back to the market later today or tomorrow and having the same balance as you had the day before because you followed your plan and did not make any stupid mistakes is so much better than the alternative. And the alternative is coming back tomorrow to your trade account and seeing a -1 you took today because because you just could not control yourself. And then you see your model tomorrow and you take the trade and you take a win, but that win needed to compensate for today's losses. Or instead of you making whatever 3%, you only have 2% of profits because you lost 1% today, for example. The numbers are, of course, example. And that sucks. So it's 10:30. I'm gonna leave the stream on for a little longer because I'm curious what we do here. But the trade idea is gonna be the same. But the lower we go, the less likely it is for me to take any trades today. And if you took shorts today, congrats, amazing, love it. What I'd like to do is when I miss a trade, like for example, the short idea, I'm gonna do that now, is would I be in this trade? So what I usually do is if I, for example, want to short from here, I'm not gonna blindly short from this 50-minute SIBI. I'm gonna sit on the 1 minute to find an entry. And the entry then looks like right into it, retrace, or retrace, we expand or displace, and then start trading lower. Then my entry is gonna be or here or somewhere here. That's what I look for. And we get that here. So it's a 1 minute. This is the wick into the fair value gap, and we make some nice sweep here. And then we trade lower. We've changed the delivery here, 932. There's no nice fair value gap. So waiting for that structure, this was the first entry you could take. Would be here, and then your stop needs to be at least above like a short-term high, and there was no short-term high. Maybe here or here, but 130 point stop loss. And then you risk to reward on the 1 to 2 would be this. This would be the only trade I would have taken. In hindsight, it would be a win, but this stop loss was not very nice in my opinion. Cool. So missed the down move, but if I was very bearish, probably would have missed it either way. That's nice for that's nice for my mental game. So I know today was just not meant to be, even if I was correct in my bias. And now it looks like we're gonna visit some more lows. We're gonna leave the stream on for a couple more minutes. After the stream, while there's not much to do right now on the chart, I just posted a YouTube video. And the YouTube video will bring you back to the absolute profitable basics of trading. is 3 PD arrays. And it's only 3 PD arrays. If you use it as a core of your model, you will make money. And it's going to be really, really easy. I highly recommend after this stream to check that out. I posted it like an hour ago, 2 hours ago. And where I want to end the stream with is a short passage from Tom Hoogert's Best Loser Wins. It's a trade book. And in that book, if you've read it before, you're going to recognize this story. He tells the story about on a day he was looking at the Dow Jones, the YM, similar, of course, as what we're now looking at ES and NASDAQ. And he was looking at exactly this, a massive sell-off. Like how many points? 2,600. Yeah, we dropped 500 points now already. He looking at a similar issue, and he was just shorting. Every short he could find, shorting. He got 2 calls, or 1 call from a student of his. And he said, I'm looking for longs because we already sold off so much. I'm going to look for longs here and here and here. And Tom Hoover says, why would you, if the Dow Jones, and in our case the NASDAQ, if it just dropped 500 points, do you think the highest probability trade is now going to be longs or just lower by just continuing the move, like could be 600-700 points? Do you really think longing is the best thing to do? And then later that day, the Dow Jones dropped another 100 points or whatever, but the long idea never came. So that we now dropped so many points is not going to guarantee we're going to get a reversal. If it will give a reversal, it will be very obvious. But for now, this does not look like a trade day again for me. Because I missed a short move, we dropped 500 points. And longing this is going to be now is this going to be low probability. And that sucks. Because now you need to sit on your hands again and wait for new opportunity, for new structure to form. And that is fine. Then you wake up tomorrow, you look at your trade account or your trade accounts, and you're like, let's go. I did not make any stupid trades yesterday. And that random dude on YouTube kept saying, sit on your hands, wait for a new scenario. Now you have your full account size you started with today, again, with new chances, with probably better opportunities than today. And you will thank me for that silently, or you can send me a message. But you wake up tomorrow with the same balance, with no stupid mistakes. And you're like, that random dude on YouTube, that young guy, maybe had a point. Maybe. And maybe he says that not because he read it in a book, but maybe because he lived this same scenario over 100 times and made the mistake himself. And I don't want you guys to make that same mistake as well. That feels like the end of a bedtime story. For me, it is. It's 10:41 p.m. here. It's a 12-hour difference in New York and Vietnam. So it's time for me to wind down and also wind down the stream. I get some dinner and then I go to sleep. Dinner, walk, sleep, go to the beach. I will look at the NASDAQ. I will look at the indices in the meantime with very low expectations. I would mark out swing lows right now. It would be the Monday low and of course the Sunday low. Looks like those are coming in hot. Similar story for gold, guys. It could be a retracement. It could be a reversal. Let price show you, do we create bearish for value gaps and we trade lower? Or is this going to be just a retracement to trade back higher again? You don't know right now. Also here, this day is now a very annoying day. But tomorrow and Monday and Tuesday, you're going to be very thankful because these candles will show you the higher time frame structure very clearly. And it creates new 4-hour for value gaps and new daily for value gaps, which is amazing because we trade from that. Cool. All right, guys. That's everything I had to share with you guys for today. Drop a W in the chat if you like today, learn something today. No trades. So we did not lose any money, also not win any money. I hope you have an amazing rest of your Thursday. Check out the new YouTube video just dropped. Join the Discord. Do not miss anything. And I see you guys later. Have an amazing rest of your Thursday and talk to you later. Bye bye.